As of this moment, with the market having just closed on October 7th, 2025, SoundHound AI Inc., trading under the ticker SOUN, finished the day at $18.25, posting a solid gain of $0.40, which translates to a 2.24% increase for the session. Now, seeing a green number next to a popular AI name might not seem surprising. The broad expectation in the market is that anything with AI in its name is on a one-way trip up. But the reality of SoundHound's recent performance is far more complex and tells a story that isn't just about the generalized hype surrounding artificial intelligence. The critical detail that most casual observers are missing is the sheer volatility and the intense tug-of-war between bullish conviction and skeptical scrutiny that defines this stock's daily life. This isn't a smooth ascent, it's a turbulent climb, and understanding the forces at play is essential for anyone considering an online investment in this name through platforms like Schwab Intelligent Portfolios, or even for those managing their own self-investing strategy on Fidelity or SoFi Invest. The common belief is that SoundHound AI is a direct beneficiary of the AI gold rush, a smaller, more nimble player that could ride the coattails of giants like Nvidia stock. The narrative is simple. As AI becomes more integrated into our lives, from our cars to our restaurants, a company specializing in conversational intelligence is bound to succeed. This expectation is fueled by a constant stream of press releases announcing new partnerships and technological advancements. However, the reality on the trading floor is that this stock moves with a ferocity that suggests deep underlying uncertainty. The day's trading range, coupled with recent high-volume sessions, points to a battleground stock. Institutional investors are clearly building positions, evidenced by the significant holdings of major players like Vanguard and BlackRock. But there's also a considerable amount of speculative trading. This isn't just a buy and hold story for everyone. Many are using platforms like Robinhood and interactive brokers for rapid trades, trying to capitalize on the sharp intraday swings. The expectation is a simple growth story. The reality is a high-stakes trading vehicle where conviction is tested daily. Let's dissect the recent market action more granularly. Today's 2.24% gain didn't happen in a vacuum. It comes on the heels of a period of significant price discovery. We've seen the stock test various support and resistance levels, with trading volumes often surging on news. For instance, the recent announcement of a partnership with Red Lobster to implement AI-powered phone ordering across all their locations provided a tangible, real-world use case that excited the market. This wasn't just theoretical AI, it was a practical application with a clear path to revenue. Similarly, the acquisition of Interactions, a company specializing in AI for customer service, was seen as a strategic move to bolster their enterprise offerings. Analyst actions have reflected this optimism, with firms like D.A. Davidson raising their price targets. This is the fuel for the bull case. People see these developments and believe the path forward is clear. They're using their Fidelity brokerage accounts or SoFi investing platforms to add to their positions, confident in the long-term trajectory. However, the counter-narrative, the reality that tempers this enthusiasm, lies in the financial metrics and the competitive landscape. While SoundHound reported record revenue in its last quarter, showing a staggering year-over-year increase, the company is not yet profitable. The earnings per share figures are still in the negative, a fact that more conservative investors, perhaps those utilizing Fidelity Wealth Management for a more cautious approach, cannot ignore. This is the core of the tension. The expectation is for growth at all costs, but the reality is that the market will eventually demand a clear path to profitability. Furthermore, the insider selling that occurred in September, though explained by the company as routine and related to tax obligations, still created nervousness among retail investors. When executives sell shares, it often sends a mixed signal, regardless of the stated reason. This creates opportunities for short-term traders on platforms like the Robinhood app who look to profit from these dips in confidence. So, what does SoundHound AI actually do? At its core, the company is a leader in voice artificial intelligence and conversational intelligence. They develop technologies that allow humans to interact with devices and services through natural language. Think about the voice assistants in your car, the automated ordering systems at a drive-thru, or even complex customer service bots. SoundHound's technology is designed to understand complex queries and provide intelligent responses. Their business model revolves around licensing this technology to other companies across various sectors, including automotive, restaurants, and customer service. They've secured major contracts with automotive brands to integrate their voice assistants into vehicles, and their push into the restaurant space is gaining significant traction. This is a business built on the idea that voice will be a primary interface for interacting with technology. The company has invested heavily in research and development to create what it believes is a superior technology to what's offered by some of the big tech players, emphasizing its independence and data sovereignty for its clients. This is a critical selling point for businesses that may not want to be locked into the ecosystems of the tech giants. Those looking for investment help might see this specialization as a key advantage, a focused player in a massive and growing field. Looking back at older reports and past performance provides a clearer picture of the company's evolution. SoundHound has been around for a while, founded long before the current AI boom took hold. This isn't an overnight success story. The company went public through a SPAC merger, a path that has been challenging for many companies. Its stock performance since its public debut has been a roller coaster, with significant peaks and deep troughs. This history is important because it demonstrates the stock's inherent volatility and its sensitivity to market sentiment. For investors setting up an individual brokerage account and looking to take a position, understanding this history is crucial. It's not a stock for the faint of heart. The past performance shows a company with tremendous technological promise, but one that has also struggled to consistently meet market expectations, leading to periods of significant share price decline. This history informs the present reality. While the current momentum is positive, the potential for sharp reversals is always present. Now, let's turn our attention to the future outlook, weighing the potential catalysts against the inherent risks. The primary catalyst for SoundHound is the continued adoption of AI and specifically voice-based interfaces. The market for conversational AI is expected to grow substantially, and SoundHound is well positioned to capture a piece of that growth. Their expanding presence in the automotive sector is a huge potential driver. As cars become more connected and software-defined, the demand for sophisticated in-car assistance will only increase. Their recent forays into generative AI, combining their voice technology with the power of large language models, opens up new possibilities for more natural and capable assistants. The continued rollout with restaurant chains and enterprise clients provides a clear and visible revenue stream. If they can continue to land major clients and expand their existing relationships, the revenue growth could be substantial. This is the future that has many investors excited, from those using sophisticated tools on interactive brokers to those just starting with online investing. However, the risks are just as significant. The most prominent risk is competition. SoundHound is not operating in a vacuum. They are competing with some of the largest and most well-funded companies in the world. Tech giants have their own voice assistant technologies and are aggressively pushing them into various markets. While SoundHound touts its independence and technological advantages, the sheer scale and resources of its competitors are a formidable challenge. Another major risk is the company's path to profitability. While revenue growth is impressive, they need to demonstrate that they can translate that top-line growth into bottom-line profits. The market's patience for unprofitable growth companies can be limited, especially if there's a broader economic downturn. There's also execution risk. Can they successfully integrate their acquisitions and manage their rapid growth? These are the questions that create the uncertainty and the volatility we see in the stock. It's a classic expectation versus reality scenario. The expectation is for a dominant AI player to emerge. The reality is a tough, competitive fight where success is not guaranteed. Comment below with your thoughts on the biggest competitor to SoundHound AI in the automotive sector. Is it a big tech company or another specialized player? In summary, the story of SoundHound AI is a compelling one, but it is far from simple. The closing price of $18.25 and the positive intraday movement reflect the market's optimism about the company's potential in the burgeoning field of conversational AI. The expectation is that this is a ground floor opportunity in a transformative technology. However, the reality is a stock characterized by high volatility, a challenging